Hey everybody, it's Shannon from AlphaTrends.net. Today's Friday, the 11th of March, 2016. Let's look at this market. We had a wild week and finished with gains once again in the S&P 500. The S&P 500 is now only down 0.5% year to date. Semiconductors are positive on the year, and so is the IYR, which is the commercial real estate. But let's take a look. The biotechs for the week still lost a little bit of ground, so they continue to be the really weak spot. But pretty much for the rest of equities, it was a strong week. Let's take a look at oil because another strong week there too, up 5.5%, bringing its month-to-date gain of 13%. Here's that daily chart, and last week we referenced that it was likely, I thought, that would be resistance here at about this 38 level. Well, we poked right through that. You can see we had one red bar on Tuesday as it pulled back there. I guess that was Wednesday actually, and then blasted through it. So this market, oil and the S&P 500 and a lot of the other markets are not finding resistance where people are expecting it to be found, which is why we always refer to any area of prior consolidation as potential resistance. We only know after the fact if it does in fact become resistance. And right now, obviously, the 200-day moving average has not acted as resistance. We closed up through that today. The 200-day moving average currently is at 202.11. So I think that a lot of people who are looking, who've been getting short this market, are experiencing a lot of frustration as it continues to go through the Fibonacci levels, through the 200-day moving average, through the volume weighted average price from January of 15 that we referenced. And now the next level that everyone has their eyes on is the gap lower here and the close from December 31st of last year, which was 203.87. So getting up through that, maybe we start to see a reversal. But let's take a look at the volatility here that we saw this week, because basically we were kind of stuck in this range here with a downward slope to it, and we broke that on the Thursday gap higher, of course, and it looked like the sellers were going to regain control. In fact, we were looking for after this support was broken, we didn't want to get short because how it got there is the question that I always ask, is how does it get to a breakdown point? And we don't want to be the ones who short it after it drops 3 points. Instead, we want to see a rally come up and then failure below a declining 5-day moving average. Obviously, that didn't occur, and that was good because it saved a lot of money from a potential short as the market gapped higher here today, of course. And again, just a lot of volatility. So we still have, what we're looking at is we have prior levels of resistance that next week this is likely to become the first area of support down near about 200 and a quarter to 200 and a half. We'll have a 5-day moving average rising up into that area as well. So, if we close that gap, I wouldn't expect it to be an easy sell-off from there. We had referenced that, we broke this trend line, and a trend line break doesn't mean reversal. It means a slowdown in the rate of ascent. And it certainly, I think this was just a big trap on Thursday that a lot of people did get short in there. And then if they hadn't covered on Thursday afternoon into that strength, then it became a very painful day for them today. In fact, today's action, let's take a look here. We can see that we pretty much closed, right on the highs once again for this market. Let's look at it on a 2-minute chart. And here we can see that we also had that, once we gapped up and got back above that volume weighted average price with a stop below the low of the day, would have been a nice way to trade this. Personally, I did not trade it long because I was, my own mind got in the way thinking that we are up too much, and I didn't think it would hold on. So, it's better to miss out on an opportunity, of course, rather than is to say, hey, this market's up too much, I'm going to sell it short, etc. So the path of least resistance is still higher in the intermediate term, and we've had a hell of a rally, but it continues to move higher. And you've got to remember now that today was day number 48 in this year. So if we look at last year, 49 and 50 days ago are right here. Well, if we hold up in this area for the next couple days, we're actually going to see that 50-day moving average begin to flatten out and turn higher next week. So, we've got the potential that this market will find resistance in here, but it's been a market that's not, it's not even easy to trade, truthfully, here, especially this last week. It's been a difficult, volatile market with these, for especially with this false breakdown. It led me to have a bias that was bearish, thinking that we would see an opportunity for a breakdown, but of course that didn't happen. So again, we have to look at potential levels of resistance, and then we have to realize that we have to trade what we see, not what we observe. And we spoke about volume, and the volume was big on the way down, and subsequently, what's the volume been doing as the market rallied? You can see just by that moving average, the volume is diminished. So only price pays. Moving averages are levels to keep an eye on the market, and if we pull back down to that 200 and a quarter level, like I said, then we've got this as a bigger level of potential support. Let's look at the NASDAQ here, and you can see I've drawn some lines on there. It's kind of making the same point here that we're going to get rid of these 2 days early, Monday and Tuesday, Thursday and Friday of next week. We're getting rid of all this data in the 50-day moving average calculation, and it just goes to show that this market is transitioning, it appears, back to the buyers regaining control and perhaps staying in control, as this prior level of resistance in here was tested this week and held as support. We also have a rising 10 and 20-day moving average. So I thought that we were in a longer term bear market early, several weeks ago back in January. I thought it was going to take a while to get over this. I've been cautiously optimistic as we've been above this rising 5-day moving average numerous times, but the market continues to show that prior levels of support are acting as resistance, and the buyers regain control, and we see higher highs and higher lows. So maybe the Nasdaq is going to have trouble with its 200-day moving average up here. Maybe it's going to have trouble with a 61.8% retracement, which is also at that 200-day moving average. It's a potential level of resistance, and it's a level that we want to be aware of. And when and if it gets up to that level, then we want to look at the price action on shorter term timeframes and look for actual evidence that the sellers might gain control and that we would see a pullback. But even if we see if this market rallies up towards that, I would expect that this would this area in here would likely become our first level of potential support as it pulls back. So Russell 2000, big move in here today in particular, up better than 2%, and it also is holding above this prior breakout point. We see, of course, the year-to-date volume weighted average price in all of these markets is really insignificant at this point, because it's so the market is so far extended from them that they don't have any relevance at this point. So we have to look at what is relevant. What is relevant is we broke this bigger band of resistance. It rallied up. We made a couple. We pulled back a little bit in here, and we had seen that kind of the same thing, that the Russell 2000 got back below this. It made this lower low below a declining 5-day moving average, but how it got there was important. You don't want to be the one who sells short down $1.50, because where does your stop go? If you did, then that's a different style than I like to take, because it doesn't give me as much risk is the way that I figure it. But anyways, the market closed back up in here, and I was saying to subscribers that I thought that this is the likely level of resistance, and that what we were going to look for was, if it got up towards that level, we were going to look for a failure if it was below these key volume weighted average price levels, such as from the last 3 and 4 days. So anyways, what we had instead was the market gapped up and ran into that 5-day moving average, no doubtedly brought some short sellers in. If they didn't cover quickly, then it was a disaster here for them as it closed at the highs of the day. And now we have to look at what's the potential for resistance in this Russell 2000. Is it up here at this prior support? the path of least resistance in the intermediate term is still higher. So I think that that's possible. The semiconductors, right up through their 200-day moving average. This is the group that I came in this week thinking that had the opportunity, the best opportunity that is, for a short sale. And instead, we see that now the semiconductors are positive year to date. So it's one thing to have an opinion about the market. It's another thing to stick with that opinion when the price action is telling you it's not time to go. So what we were looking for in here was if we broke this band of support that we've seen over the last couple of weeks, that if it came down like this and then broke down, then we would want to get short with a stop above the most recent relevant lower high, which we have a high, a lower high, and this would have been what we were looking for as that relevant lower high below a flat to declining 5-day moving average. That didn't occur. So money saved on that, opportunity missed out with a gap, and that's how it goes sometimes. So what's the potential for resistance in here? The opportunity is that it continues to move higher. Perhaps one of these levels will be where resistance is found, but right now we still have the buyers in control of the intermediate term trend. Biotechs have been, again, they're the more of the disastrous group, but they came down and found some support where we would hoped they would to see a little bit more neutralization in this market. And now the biotechs are really, this is kind of the key band of key trading range rather that they're in right now, and we're kind of right in the middle of that once again. The 30-minute time frame, we can see we've got a declining 5-day moving average, and we've got price action all over the place, really not giving much opportunity for swing trades in there. So it's a mess, and I consider a messy market like that to be a good avoid. We had spoken about stocks like Amgen, AMGN, not AGN. Amgen did look like it was breaking down for 2 days here this week, and for the week, the volume weighted average price for the last 5 days, it did get back above that. So as bearish as it may look, and we've got the potential for resistance in here. Amgen, this is going to be a key level next week. If it breaks back below, or I'm sorry, if it is unable to break back above and hold above there, then perhaps we see something like this unfold, and then it begins to break down, and you would want to short somewhere in there. Anyways, it felt like a real long week to me, so I'm going to cut it off here, and hope you had a good week. I'll talk to you next week. Thank you.